So good morning, everybody who joined the webinar session today. My name is Barbara. I lead Efma-Webinars, and it's a pleasure to welcome all of you to the Efma and Capgemini joint FinTechVisor webinar called The Path to Collaboration. Before we start, let me kindly guide you through some initial details about our agenda and our speakers. So as you may know, the main objective of today's discussion is to talk about bank and fintech partnerships. And it's a pleasure to welcome our speakers for today. So Elias Ganem, Vice President, Chief New Technologies Officer and Fintech Lead from Capgemini Financial Services Europe is joining us today. Elias will be presenting World Fintech Report Key Insights for you, and he will be also moderating the panel discussion later today. So Elias, welcome to the session. And then we also, space for you, Elias. Okay, and then we have Lubomir Olach, Director of International Development and Member Relations from EFMA. Lubomir is here with us to guide you through the FinTechVisor platform, and also he will be showcasing the demo of the portal today. Lubo, welcome.
Good morning, everybody.
I would like to firstly introduce the agenda flow for all of you so you know what you can expect. So after my welcome speech, I will give a space to Elias to introduce the key insights from World FinTech Report 2018. Then Lubo is here to present the FinTechVisor portal. And what we didn't mention for you today is that we have invited 3 amazing FinTech companies to join the panel discussion talking about real partnership cases. We will introduce the panelists later on, but please stand by because you can definitely expect a fruitful discussion. For sure, at the end of the session, there will be a space for Q&A. And as you may have noticed, your mics are muted in order to avoid any communication noise. So if you would like to ask a question, please use a chat section that you may see on the toolbar, and then I will be addressing the questions to our speakers. In case you would like to speak and jump in a call, you need to use the hand button in order to let me know, and then I will be able to unmute your mic and you will be able to join the discussion. Moreover, the session is being recorded, so the video recording together with the presentation deck will be sent to all of you right after the webinar, so you will be able to share or review with your team members. So before I give a word to Elias, let me just quickly let you know about the background behind EFMA and collaboration with Capgemini. So this is definitely not the first project where we joined forces. EFMA and Capgemini already collaborated for a kind of long time, and we joined forces for publishing the World Reports in order to track the trends in the retail banking, insurance, and fintech sector, and in order to provide with some strategic insights. So we firstly started with World Retail Banking Report in order to track the retail banking area. Then we also started with World Insurance Report. And the past 2 years, we also decided to join forces and start with World FinTech Report. Maybe you're asking for the reasons why, maybe not, because you definitely know that fintech and banks are fit together. And that's why we decided to prepare a dedicated report where we want to explore the approaches for a joint bank and fintech collaboration. But I assume that Elias, you have definitely more information on it, and now the space is yours to present the World FinTech Report from 2018.
Thank you so much, Barbara, for the introduction, and thank you all for joining today's webinar. Our main goal, EFMA and us jointly, is to foster collaboration and to make sure that you startups and you scale-ups have the opportunity to collaborate faster and better with our corporate clients. So let me walk you quickly through few slides on how is the landscape of relationship between startups and large organizations. And let me start by bringing to your mind 2 major changes that has happened, and where you startups are able to be much more efficient than the large groups. First, thanks to all the mobility that the smartphone brings, we are in a way where we customers are looking to buy experiences, while our clients, the banks, are into selling products. So we don't enter in a bank to buy a credit card. We enter in a bank theoretically, or we engage with a financial institution so it could help us solve our ambition to travel the world or to buy a new house and this and that, while the banks are selling us a product. So we buy experience, they'll sell products. So there is a challenge here. Second biggest challenge is banks have been, bank insurance company and all large corporate have in their DNA the ownership of the client. They invest a fortune in making sure that the client is well known, the whole KYC approach, as well protected, as well served by protecting the balance that he has given us. So banks do reserves, do reporting, so we can engage better with the customer. And here you go, startups, thanks to rules that the regulators are putting in place. In Europe, we call it PSD2 or open banking or this kind of regulations. Now startups are able to have an access without having to own the customer. And this access gives them a much faster interaction, a way cheaper interaction, and a more customized interaction to what the banks can do. And if I were to put my thoughts into a picture, because a picture speaks better than words, let's look at this graph here, where we put products at the bottom, a lot of product on the right, and a single product on the left. And on the other axis, we talk about friction. No friction bottom left, a lot of friction top left. Friction being due to cross-selling, to upselling, to contract opening, and so on. Today, banks, insurance, or any large corporate is here. They have all what we need, but clearly moving from one channel to another is a nightmare. While startups, any one of you, are exactly here. A single product with no friction. And every single day, one of you wakes up and say, you know what, banks, insurance, large corporate, telco, retail, hotels, create a lot of friction into their experience. Let me steal one of their products, or let me replicate one of their products. Airbnb, Uber, Revolut, and you name it are the perfect examples. So slowly but surely, banks and insurance could end up losing the product, but keeping the friction. Now, life for you is not easy. Startups have the problem of scaling. And if they don't scale, they create friction. The experience is not as good, the global reach is not as good, the customer service is not as good. And if that happens, we ended up in this place where none of you wants to be, which is plenty of friction, few products. So logically, the opportunity is to leverage what they do best, our partners do best, which is expansion, which is distribution, which is products, and what startups do best, which is seamless experience. And we end up with this platform bank. Now, if banks and insurance were the only, and startup were the only player, life would be easy. The problem is there is a black swan. This kind of problem that we would never thought would happen, that is happening. The first black swan is the regulator that now is enabling others to join the party easily, is non-banks that are able to become now players. In Europe, there's a telco called Orange that a year ago decided to become a bank. And 15 months later, by the way, thanks to the support that Capgemini has given, it has become a bank. So today a telco became a bank. And finally, we have the GAFA that are on the west, but we also have the AT, Alibaba, Tencent that are on the east and in China, and M being Microsoft. So clearly the landscape is quite difficult today. And to confirm that, if we take some articles that came into the press, French banks are struggling to attract new customers. French banks haven't increased their customer base since 2015. Also, the market is changing. People like Amazon are not only selling goods or services, they are significantly into the financial services. And if you don't believe me, let's look at the right side of this graph where we see Ant Financial. Ant Financial is nothing more than Alibaba. Ant Financial has passed many banks, that global banks, French, Spanish, Canada, Goldman Sachs, and you name it, Barclays, and has become the 10th largest banking group by market cap. By the way, if you look upper, you see that now we only have 4 American, 4 Chinese, and 1 European. So the landscape is significantly changing. Which means, what does it mean the landscape is changing for banks? Well, banks have to reinvent themselves big time. And on top of doing what they have to do at the bottom, which is operating the risk, the capital, simplifying the business model, optimizing distribution, they also have to make sure that they put the customer at the center, that they have a mobile experience, that they tackle the legacy, so on and so forth. And all that together makes sure that the bank of the future is a tough journey that banks need to address as you go. And as such, that's why we issued the World FinTech Report, which, and I strongly recommend you to go on fintechworldreport.com here, where first you can download the report itself, but also you can listen to videos about agent of change, what large players into the financial services are saying that the world is changing. And if I were to summarize our report in one slide, first, customer centricity, that is due to the mobility that we're all carrying, is giving a huge opportunity for fintech to gain more customer and customer engagement. So banks are losing on here, but banks have strengths that fintech don't have, scale, and fintech have strengths that banks don't have, seamless experience. So there is clearly a complementary strength and a symbiotic relationship between both. The only problem is not every partnership is a good partnership, and finding the right partner is essential to grow. And you have to do it fast because the big tech are coming and eating our plate. And in few words, each one of us, fintech and traditional firms, brings a lot to the table. While fintech brings agility, innovation, data, and so on, traditional services brings risk management, scale, and so on. So there is clearly a win-win situation. And this win-win situation is essential to be done quickly because big tech are bringing everything that startups and banks have. Better customer experience, economy of scale, operation efficiency, data, personalized offering, and you name it. And if to make sure that we are all clear that not only the retail banking is being disrupted, one slide from our recently launched World Wealth Report that has shown that 60% of the high net worth individuals are keen to engage with big tech within the next 6 months. So big tech are not anymore an idea. If high net worths are willing to work with big tech in the next 6 months, the problem is already happening. And I think the scary part is the right side of the slide. Up to 40% of the high net worth individuals could consider allocating up to 50% of their wealth to big tech. So a banker means for the banking industry, 60% of their population will be talking to, in the next 6 months, to the big tech, giving them up to between 11 and 50% of the wealth. So there is a real challenge for the banks to compete. And in order to make that work, how do we move ahead in enabling the collaboration? Well, at Capgemini, we believe that startups are not made to collaborate with banks. Startups are too young, are too unstructured, banks are too old to structure. So it's very difficult to make collaborate banks and startups when it only, but could work only if it's about talk. But at Capgemini, we believe in effective collaboration. And I would say effective collaboration towards industrialization. And we believe the best partners are the scale-ups to make that happen. So we have given a definition of a scale-up as a company, as a startup that has raised at least €1 million, $1 million, or £1 million, that has full-time employed management. So when we talk to a client, we put in front of the client the right profile rather than one guy fits all. And last but not least, that the scale-up has business traction. And we define business traction of €200,000 of sales. That means that the startups is not anymore into the POC face, but is really doing business. Then we sat with in a co-creation mode. We invited bankers, we invited insurance company from all sectors in terms of the business people, as well as compliance people, as well as purchasing people, as well as legal people. And we told them, what are the questions that you have in mind when you look at startups? Then we invited startups, and we invited also Startup Bootcamp as an accelerator. And we came up with 4 fundamental pillars for effective collaboration. Does the startup or the scale-up has the right people? Is it financially sustainable? Does it have the right business traction? And does it have the right technology to scale? Based on these 4 pillars, through this co-creation during 6 months, we ended up building a questionnaire, a very detailed questionnaire covering all these boxes that you see, which are some 100 questions, each one of them qualified from 1 to 10 in terms of evaluating the maturity of the scale-up. And our approach to evaluate that is a 360-degree approach, where first we want to do web scraping about the scale-up, to have a sentiment, to know what is being said about the scale-up into the marketplace. Second, we will send the questionnaire to the scale-up with all what we were able to capture online about it, and we will ask the scale-up to tell us, to answer the questionnaire. The more detail the scale-up gives, the more we know about it. Then we will put in front of the scale-ups experts from Capgemini, people that will challenge the answers and make sure that we have a good understanding. And finally, we'll ask the scale-up to introduce us to 2 clients, and we will go to the client and tell them, how happy are you with the scale-up, in an NPS approach, Net Promoter Score. By doing that, we end up with an evaluation. Either we think that the startups is not a scale-up, and we will remove it from the system, or we think that it is already able to do effective collaboration, and we will give it 4 levels: promising scale-up, emerging scale-up, intermediate scale-up, or advanced scale-up. And all that is about creating effective collaboration between large and small. And as such, the scale-up end up with a stamp that it can use in its marketing material with a specific number at the bottom that is individualized, and that will give a chance for the banks and the clients to come to on Capgemini website and on the FinTechVisor, where they will see the details of this scale-up. Why are we doing that? Because in order to enable effective collaboration, we have an offering called Innovation as a Service with a Scale-Up, where first we evaluate the problem that the bank or the insurance has, what are the strengths and what are the weaknesses of the current operation. And we will replace the weaknesses by a scale-up. How we will integrate the scale-up into the company is the governance. And if we were to bring a scale-up, what will be the new customer experience? Then we will scout the market and that's why the FinTechVisor is essential so we can find you. And then some of you will be the right one to work with the client. We will evaluate some of you. Are you a scale-up, and do you qualify to be qualified by Capgemini? And then we will build the new experience. We will push it to the client. If the client likes it, we get into orchestration, where now it's a combination of what they do best and what you all do best. And we do that either on a module by module or all together. Why are we doing that? So we can build the new stories where a financial institution has a challenge, and thanks to an effective collaboration, within a certain months, we improve the experience and have the right KPIs. That's basically what will make the future of financial services effective. And that's why you are here today listening to us, and would like you to put your startup into the FinTechVisor, and some of your startup will be evaluated through the FinTechVisor. That's in a nutshell what we do. Pass it back to Barbara to take it forward.
Elias, thank you very much for a great presentation. If you have any questions for Elias, please feel free to write them down into the chat section. We will definitely dedicate a space at the end of the session to respond to all of them. And now my colleague Lubo is here with me to show you and to let you know more about the FinTechVisor, about the benefits for you. So Lubo, the floor is yours.
Hello everybody again. Thanks for joining this webinar. I'm very happy that we can really introduce you this great initiative, a unique and impactful Worldwide FinTech initiative you can see on the screen, where we really can put together three key partners who should be, of course, on this portal, because simply our dream was to create an ecosystem. An ecosystem can be created if you have a platform and cooperating partners. So not only fintechs, but also financial institutions and enablers, accelerators, incubators, and other VC companies. We, with Capgemini, we sat down and we were thinking, so how we can achieve the following goals you can see on the screen. And that was also not an easy task. But one thing which unifies all of them, that we definitely wanted one platform where financial institutions and fintechs can get together, where they can work collaboratively on new products or new services and create a living community which could bring the benefits of sharing information and having a better overview of what's going within the industry. So having said that, simply to co-create the future of the financial industry and for financial institutions to choose the right fintech partner. And doing that, we, as I said, sat down and came up with a platform which we called FinTechVisor. FinTechVisor is a portal where you as fintechs have a great opportunity to post yourself, your profile, and your solution. And the reason is simply to get connected with bankers and insurers and develop your portfolio of potential partners as the one. Second, showcase your solution on a global database and benefit from great exposure. Thirdly, find out where you stand on the market from our community's feedback. And of course, to motivate all of you, having the chance to win the best fintech contest, which we are about to also organize next year. So how it works. Let me show you a little demo and the homepage where you as a fintech can sign in and create your profile. Of course, there is other part and other community financial institutions where, thanks to Efma, we have the global largest peer-to-peer banking community with more than 3 institutions globally who have the chance to have a overview when you on the FinTechVisor, what kind of solutions and profiles of fintechs are there. So to be able to do this matchmaking platform possible, we would need your profile first of all, where you simply in a form you can fill out the key information about your organization, some visualization, and the key people working in your team. This is the first step. Second step is to present your solutions or solution together with different visuals, video, or slides that any reader or visitor of your profile and solution can have a clear overview what you do and how you do it. Having said that, of course, there will be a search engine where you as a fintech will be listed, and based on that, a bank or any other fintech can have a search engine to get the right fintechs, because we of course will categorize you, and based on that, like fintechs in insurance or regulatory field would have the chance to have the right overview who is and what he or she does in which category. So to be able to make it possible, the financial institution or another fintech has the chance to write a form where we'll list the key category the person is interested. It might be either a project manager or anybody from banks or insurance institutions. and can list all of these there, and then have a list of all of you on the slide as you say. We just gave an example of money transfer fintechs and organizations working in that, and there this way the person who is interested can see and identify the right fintech for them to contact. And the contact works very simply, where a chatbot, we just put an example of Revolut, for example, where a bank can simply chat and get connected with a fintech. Having said that, of course, there is many things where we would like to keep you updated, and not only about partnerships, but other articles important happening in the financial services industry. That's why we also creating a special corner where all this information will be available for you. In a summary, I just put some quotes, and you can see them here, where we try to show you what's the benefit for other fintechs. First of all, was the finding the right partner is always a struggle, so this platform can give you a hand. Also, the possibility to initiate fintech to fintech connections are also very important, as we see more and more collaborations between fintechs among themselves. And in the end, this is a great chance to have a global platform, because as the third one says, it's very difficult to have global reach and good understanding of where the opportunities can be found. This is all from my side. Please go on the FinTech portal and FinTechVisorPortal.com. The team around Barbara, who leads the whole session, is the one to contact you and guide you via whole FinTechVisor portal. Barbara, back to you.
Luba, many thanks for a great presentation. As you said, in case you guys have any question regarding the FinTechVisor portal, I'm here for you with our team in order to support you and assist with any submission questions. And now, as said in the beginning, we invited 3 great fintech companies to present their case studies and also maybe to have a nice conversation with Elias with regard to what they are doing and maybe talking about the partnership cases with banks. So Elias, now back to you. And please, it's your turn to introduce our 3 fintech companies for today.
Thank you so much, Barbara, and thank you so much, Lugo, for giving us the great overview about the FinTechVisor opportunity, which, again, the main purpose of the FinTechVisor is visibility, credibility, i.e. business. So please, startups, scale-ups, take the time to invest in your image towards the banking industry. And today, I'm very lucky and happy to have Elem, Anatolio, and Michael with us that will be sharing with us their thoughts about their collaboration with large organizations. And in the next few minutes, each one of Elem, Anatolio, and Michael will have 3 minutes to share with us what they have in mind, what they are working on, and what they have learned about collaboration between large and small. And based on that, after that, we will come into a discussion with them. And please feel free, all of the listener, to drop your questions. And by the end of the presentation, we will open the floor. Barbara will be your speaker, your voice, to share with us the questions. With that said, Elem, the floor is yours for the next 3 minutes to tell us all what CBOT does.
Hello, hi everybody. Advancements in artificial intelligence, specifically in NLP and deep learning, and the rise of messaging have unveiled a new phase in the customer interaction in the financial services. And today, conversational banking is considered as the new digital framework that offers more direct, natural experiences than the existing mechanical digital channels. And considering these huge trends, our founders spun off CBOT AI from their previous business focusing on data analytics. It's a San Francisco-based conversational chatbots company that specializes in AI-based solutions to help global or local brands operating in the financial services. Our main product, a frequently asked questions chatbot, provides real-time answers to customer questions with a high accuracy rate thanks to our technology based on 4 pillars: machine learning, natural language processing, interface connector, and intent engine. I would like to mention our 3 partnerships. First is with İşbank, the largest private bank of Turkey, and we developed its text-enabled AI-based chatbot, Ask İşbank. It is the first AI-based banking chatbot in Turkey. We are also a partner of Amazon, developed its AI-based skincare bot. And thirdly, we developed a chatbot to help ING Turkey's customers. Its name is INGO. In our partnerships with İşbank and ING Turkey, our product serves on the bank's webpage and on Facebook Messenger. The customers can receive real-time answers to their everyday questions concerning financial issues, as well as non-financial questions, such as road conditions or weather forecasts. The system is integrated into the bank's web pages and helps customers with a considerably large coverage, including loan and deposit interest calculations, yield calculations for various investment products, campaign and offer search, ATM and branch locations, thanks to its web crawling capabilities. Our banking chatbots are built with semantic understanding and NLP technology and use AI to anticipate the whole range of natural text messages and provide a natural interface to the customers. The product goes through a continuous process of training in terms of leveraging NLP and understanding the nuances of Turkish, the intent and the context as the conversations accumulate. And we aim to enable our customers to offer an enhanced banking experience by this chatbot that recognizes 2,500 different intents. We are working on other projects in collaboration with Turkish and global brands which are still in the pipeline. Thank you very much. This is a brief story of Cbot AI.
Thank you so much, Elem. One question, where are you from and where's the company based?
The company is based in San Francisco. However, we have teams both in US and Turkey, and I'm based in Istanbul too.
Fantastic, brilliant. Thank you so much. Anatalio, all yours, the floor is yours for the next 3 minutes, please.
Thank you. So I'm Anatalio Ubalde, and SizeUp helps banks better serve their small business customers, and the way that we do that is through big data and algorithms. For the small businesses, what we do is we help them make smarter decisions through data. We're trying to bring them the type of market research and business intelligence that's typically only been available to huge corporations. If you go to the Wells Fargo Works website, you can see SizeUp, and that's a small business portal. What SizeUp does on that portal is it helps businesses do 3 primary things. The first is it helps them benchmark their business by specific industry and geography across a number of different KPIs. It also helps them find customers, suppliers, and understand the competitive landscape. And then the third thing is it helps them optimize their advertising. So through the SizeUp technology, we work with banks to help them, 1, introduce products and services to their business customers, attract new customers, retain their existing customers, and increase engagement digitally and also in branch location. Our business model is really built around partnerships, and when we come into new markets, we will typically launch with a bank or an insurance company. So that's at a very high level what SizeUp does and what our relationship is. I can talk more about other aspects in the question and answer.
Thank you so much. Very happy to hear the opportunity that you are working on. Michael, Token, tell us more about Token.
Hello, everybody, and thanks for joining today's webinar. Greetings from Berlin in Germany. We are Token, and Token is an open banking platform. We began just 3 years ago in San Francisco. We now have offices in San Francisco, naturally, in London, in England, and also Berlin, Germany, and we're growing rapidly. We're actually hiring, so please listen carefully. Our core product is an open banking solution. We've already heard on this presentation and the ones before, open banking being a hot topic right now and a great opportunity for banks, but also for fintechs like ourselves. Our core solutions really play into the regulatory sphere around PSD2, this Payment Services Directive, the second one, which was just highlighted. So what we do is we help banks comply with this regulation in a record 90 days. That's an off-the-shelf solution that they can use. But also, we have aggregation services, meaning you can connect to any bank account from your own core bank account. We also have Bank Pay, which effectively is leveraging bank-to-bank account payments at merchant checkout. And really our core solution, the one, our crown jewel that sits on top of all of this, is our smart token technology, which effectively makes open banking safe, simple, and smarter. And really, in a nutshell, this technology enables the flexibility and the scalability to deliver a highly secure user experience, whatever the data or payment needs are today or indeed tomorrow. So we're really setting up banking and merchants on the other side of the ecosystem for the future to plug in together through one secure API. I hope that's a good introduction.
Amazing. Guys, the three of you are amazing. Looking for 3 minutes and you all done your elevator pitch in 2 minutes. This is where I can see that these companies are not startup. This company have skills, are scale-ups, have grown and are operating quite well. Please, all the listeners, shoot your questions and Barbara will come to it as we go. For the three of you, in fact, my first question would be about partnering with large organizations, partnering with banks. What is the largest challenges that you had to overcome, and how did you overcome that? Elem, any idea, any example that you could share with us about collaborating with large, having challenges, and overcoming the challenges? Elem? Hello?
Sorry, I forgot to unmute my voice. I'm sorry. First of all, banks are familiar with cooperating with large technology firms, but collaborating with a partner who has completely different way of working is not an easy task. So in terms of cultural fit, we had some challenges. Banks have many things on their agenda, whereas we have a high concentration on a much more limited area. It was the case for our both partnership with Isbank and ING Turkey. But in our cases, this was not been at a level to affect the sake of our project. Additionally, we had challenges regarding our pricing model, which we had to update twice during one of our partnerships. And dealing with the bureaucracy was also a challenging issue. There were many departments such as procurement, security, finance, beside the digital unit which we were talking to. And we had to communicate with all of them and ensure the fulfillment of their separate requirements. Sometimes it made us feel like working with different companies. And I can advise fintechs to receive mentoring on compliance and procurement procedures. That is our challenge, basically and briefly.
Thank you. Thank you so much, Elem. Guys, just to make sure, please keep your answer short, a bit shorter than what Elem has done here, just to make sure that we can get in several questions. Michael, would you share with us also some thoughts on challenges that you have overcome collaborating with large organizations?
Sure. I think just as a precursor, I would say that banks, since banks was one of the topics mentioned, banks have always been the true innovators and the original fintech. So I think acknowledging that banks have a business in place and we don't know everything about their business, you have to start on that footing and treat them with the respect that they deserve. That goes for any business. But our challenge that we faced right from the get-go was, how do you move through the feasibility filter that every bank has, an innovation filter in place? The likes of Capgemini put them in place. How do you get through that? And there's a proof of concept, there's a pilot, and then you hope to get to production. So a lot of banks are willing to go with proof of concepts. Getting to the pilot to actually make it more real, that's a challenge. And how we've overcome that is really maintained our uniqueness and tried to stay true to our mission, and also focused on getting senior level engagement within the organization right from the get-go and actually engaging at industry level.
I think that this is essential, having the senior management involved from the beginning, not only for the picture or for the statement and the PR, but for effective collaboration. I can only support this point. Natalia, tell us your story in collaborating with banks. What went right, what went wrong, and how did you overcome the what went wrong?
Sure. So I think many fintechs are startups or scaling up, and banks traditionally work with larger companies. And startups and Fortune 500 companies are very different. If a bank's negotiating a contract with IBM, then IBM has a team of procurement and legal staff to work through the lengthy and complicated legal agreements. But fintech startups can't do this because the cost and time is too much. So progressive banks realize that they need different procurement processes to work with fintechs and be more startup friendly. I'll share an example which a bank already wanted to hire us, and they sent us their fintech friendly contract, which was around 100 pages, which isn't really that short. So if you're a bank that wants to work with fintechs, you need to figure out how to make a procurement process faster and easier, because fintechs like building stuff, not working on contracts. And the sooner you get through it, the sooner the project can get built.
I love this friendly contract of 100 pages. I've seen so many of these. We made the effort to enable quick introduction of a startup. Oh, lovely. How? Well, we haven't changed much. That's what has been the point. Now, looking to collaboration between these two weird bodies, the small that you are agile and structured towards product delivery, and them and the banks and insurance are much more into the protection of the assets. Where do you see the role of trusted third party like Efma, like Capgemini, to help you accelerate the collaboration? Maybe LM, you can give us some thoughts, and please keep it very short if you don't mind.
Okay, thank you. I think they are helpful in 3 areas. First is gaining trust. It's easier to gain trust when you have placed in these sort of trustable and reputable environment like Efma. Secondly, they provide us several networking opportunities. And they also have an educational and mentoring function, as they arrange some contests, awards, and gave an opportunity to fintech to see what others are doing. It's very important to see what others are doing and what is successful and what is not. So it makes us benchmark ourselves according to the others.
Fantastic. Thank you so much. Yes. Natalia, what would you add to this list, or what would you change in the list that LM started doing?
So I think that third parties really are terrific at making connections, and you find this with venture capitalists and accelerators, because the reality is banks are huge. So finding who the right person is to make a connection with, oftentimes these third parties already have those connections in place. Another issue is that startups are so focused on solving their own problems and making their own product better. They're sometimes so focused they're not aware of what the many different problems or the ways that their technology can solve a solution of, for example, a bank partner. So I think that the connections are important.
Fantastic. I fully agree with you. Michael, your thoughts on that?
It's an interesting one. Again, I think it's back to acknowledging that, bankers are no longer paid to take risks. There's a lot of red tape and politics and bureaucracy in there, and so they lean on the professional services like Capgemini and others to de-risk partners like these fintechs like ourselves. And as a result, these people who broker the introductions expect, and in some cases rightly so, expect the fintech to play their part, meaning to suit up, show up, and shut up, meaning let your product do the talking now. We have already brokered the introduction and proved that you're here. Now just don't rock the boat too much. We have a role to play, and I think that's something that a lot of fintechs forget, is that you've earned a seat at the table, but it's a case of actually walking in the door and highlighting not just what you can do for the bank today, but what you can do for them in the long run, show them a vision and where you fit into it, but acknowledge that they are the custodians of value. You are a cog in the wheel.
Guys, if you haven't heard what the three guys have said, I gave you the recipe of success for collaboration. Build the trust, build network and knowledge, and make sure that you know what is your role as you go with trusted third party. I think amazing. Thank you so much, guys. Barbara, what the floor is saying, any question coming from the audience?
Yes, we actually have a couple of questions. Some of you have been interested to know more about the Scale-Up Qualification Program and also about the community that you can meet on the FinTechVisor. So maybe I can make a joint question out of it. So the first question, Elias, maybe on you. How many startups are already participating in the Scale-Up program? And what are the benefits to a startup of participating besides the certification? So access to capital, access to target customers, or access to any other support. And then maybe Lubo can continue because there's one more question. How many financial institutions and what kind of financial institutions will be connecting with startups on the FinTechVisor?
Fantastic. I'll take the first part of it. So today, no startup is in the program because only scale-ups are in the program, right? Very important that our entry point is, do you fill the 3 bullet points? Have you raised more than €1 million, dollars, or pound? Do you have a full-time management team? And do you have business traction? That will be the entry point. If the answer is no, not yet, not really, no worries. Please continue growing. And once you get there, join us. Now, today we have 10 scale-ups across the world that are being evaluated as we speak. The program is being launched as we speak, by the way. We announced it in Money 2020, just before holidays, and then we finalized all the building blocks of it. And today we are having the first test with the first 10 scale-ups as an MVP, and more to come. If you think that you fulfill the request of the 3 levels of scale-up, and if you think that your product, your service, fulfill any need to a bank and insurance, please, through the FinTechVisor, we are more than happy to engage with you. Last but not least, as the scale-ups will be evaluated and qualified on the FinTechVisor, the one that would have earned the qualification will have the stamp that I showed you earlier on, where they will be identified. And on the FinTechVisor, there will be a section where specifically dedicated to the qualified scale-ups. So please raise your hand if you think you are there. We'll come back to you if we feel that you are the right one to work with us.
Lubo? Thank you very much. So maybe, Lubo, the floor is yours. So what kind of financial institutions do you connect startups with?
Thank you for the question. I would start, first of all, with Efma. I already mentioned that we are gathering more than 3,000 members across the globe. And the association is a non-profit organization that is governed by banks and insurance companies in retail financial services. Having said that, means that it's the largest retail financial services community, focusing also on fintechs and other, areas of banking innovation, all, angles of and aspects of banking. So you have the chance to get connected with all big guys from Santander to BNP Paribas to Tokyo Mitsubishi or to Citi in the US or DBS in Singapore, if I would take the global landscape of the banks. And as I said, we also have the partners, and we try to engage all our members to spread out the message about the FinTechVisor and engage more and more their partnerships and collaborations with fintechs. Barbara?
Thank you very much, Lubo. So Elias, you still have a few more minutes to ask some questions to our panelists. So if anything is prepared from your side, go ahead, your turn again. Elias, we cannot hear you. Probably you're self-muted.
Thank you so much for the reminder. Well done, Barbara. Yes, I always have a question. Guys, as you engage with banks or with clients, What makes you quickly realize that bank A is the one to work with versus bank B doesn't worth it? Your time is very short. You have little business development people. So have you developed a way, a secret sauce to know that working with A will deliver, working with B will not deliver? Let's start with Adam quickly. What has been your secret sauce to identify the right partner?
I think working with big institutions is a good choice. It's easier for big institutions to allocate adequate resources to innovation in terms of finances and know-how. So, I think making partnerships with them is more inspiring for partners of fintech. So, we were almost sure that when in our two partnerships that they have a clear innovation agenda and model, and it's very important. So it made the business less frictionless. Also, you should be sure that you will have an enhanced visibility and a good reference point to your prospect customers.
Brilliant, brilliant. Thank you. And Natalia, your secret sauce to quickly sniff the right from the wrong.
Yeah, so the types of banks and insurance companies that we like to work with, you have to identify that they're innovative. We want somebody who wants to do more than what they're doing and think bigger and expand beyond traditional banking. The other important thing is there a champion there? If there is a champion for your project, they can help maneuver through all of the challenges of working with a large organization.
I love that, the champion, yes. Now, by the way, what you said, are they innovative? All of them claim to be. Finding the right one that is effectively is the challenge. I fully agree with you. Michael, your secret sauce.
Secret sauce. I think the saying in the past that regulation can stifle innovation somewhat foolish. I've heard it recently mentioned on stage, and I think that in our case, for Token anyway, regulation has certainly acted as a catalyst for what we were doing. We had a technology looking for a problem. We found that problem in open banking and indeed PSD2. And what the great thing about PSD2 is there's a deadline. And when there's a deadline, people panic. And when they look around and they look for the best technology, we saw immediately that we need to look for those who haven't built yet, who haven't made the decision. We need to engage a senior sponsor and highlight to them very quickly the benefits, to how we can address the problem better than others.
I fully agree. Urgency is our best partner to get there. Fantastic. Barbara, the ground, maybe the last question that you have got from the ground.
Yes, unfortunately, the time goes very fast. So the last question, and then we'll closing the webinar. So one more question regarding the collaboration. So what do you think the revenue sharing percentage should be for banks and fintechs for collaboration? Elias, probably the question on you, but we can also engage panelists.
For me, thank you. A tough question. I love that. There is not a number. I would not say it's 1, 5, 10%. I think it's important that revenue sharing is the best way to motivate everybody to work. And that's important. So the concept of revenue sharing is essential. The percentage is being transparent is a good way to start with. It costs us to operate X. On top of X, we want to make our margin is of Y. And on top of that, this is all what we can get on top of it. But so don't be greedy, but don't be too conservative. If you go too cheap, the client will doubt of you. If you go too expensive, he can go with SAP. So finding the right percentage is essential. And that's one, by the way, very interesting question, because one of the things that we do a lot in Capgemini when we engage between a scale-up, a client, and us, is we discuss quite deeply what is the best business model for all parties. So it ended up being a win-win-win for the three parties.
Elias, thank you very much. Thank you very much for moderating and presenting. It was very, very valuable. So we actually came into the end. So many thanks for your participation. Just a quick reminder to all of you, you will be receiving the presentation deck and the video recording right after the session. You see on the screen the FinTechVisor email address. So if you have any questions or comments, please feel free to get back to us. And many thanks for your participation and look forward to meeting you again. Bye-bye.
Bye, everyone.
Thank you. Bye.
Thank you.
Have a nice day.
Thank you.